Hey, it's Cindy Padness with Illuminate Ventures, and I am here with Jim Yu, who's the founder and CEO of one of our star portfolio companies, BrightEdge. I have known Jim for a very long time, since, in fact, before he founded BrightEdge. Had the pleasure of getting to know him while he was working at Salesforce. And if you ever wonder how the App Exchange came about, you ought to ask Jim about that offline, because he was part of that very original crew there. But have been on the board and investor in BrightEdge for many years, including watching Jim and his partner in crime, Lemuel, work their way through some very difficult times from 2008 through 10 during the last financial crisis. And it's why I asked him to join us to share his experiences in both going through that and surviving and thriving. Really over the last many years to build what today is nearly $100 million revenue run rate company. So Jim, welcome. It's great. Thank you for joining me.
Thanks, Cindy. Great to be here.
We're just going to jump right in, if you don't mind. What I'd love to start with is just to know a little bit about what did BrightEdge look like in 2008 as the whole financial crisis unfolded.
Yeah, so in 2008, we had just raised like a small Series A. It's probably a little under $2 million, roughly about what we raised. And I think we were probably 5 people. We were pre-revenue at that time. And we had a handful of very early deals. And so that's what we looked like. We were kind of a concept with some early tech and a couple early customers, not paying us anything meaningful, and with probably about $1.5 million in the bank, something in that neighborhood.
Yeah, I think it was $1.5 million in that first round. So for everybody listening, I think the funny part there is think about that $1.5 million, and Jim called it a Series A, and that's what it was back then.
That's right.
It's long enough ago that a Series A at $1.5 million was small for a Series A, but there was no such animal as a Series Seed. And Jim and Lemuel Park had bootstrapped the company up until that point. So they had built product, they had a small team, and we were privileged to be amongst their first investors. So so there you were, $1.5 million in the bank, not a ton of money, but more than you'd had a few weeks earlier, I suppose.
That's right.
Tell me what the top things are that you did in that time frame that you think worked. What worked well for you to sustain the company?
I think the first thing is we had this, I still remember it pretty vividly. We had this philosophy on spend, which was just don't spend. It was like, I remember single thing that we would look at. We would look at every single expense. We would look at every single hire. And we just really approached it from the perspective of, if that was the very last round that we were able to raise, what would we do? Right? Because I think what happened in 2007, it was a great market, right? So much like it was kind of in the current time, right? It was a really good market. It was a frothy market, and it all of a sudden switched to one where it was like unclear when there would be any access to capital, right? So kind of, I think one of the things that we did well was we really thought about kind of how do we make sure that we can, kind of get the things we needed done, but really minimize the amount that we had to spend, right? Really approached it from the perspective of, if that was the last sort of amount of capital we were going to get for a long period of time, how would we approach building the business?
So what did, at that point in time, very early life of the company, what did you prioritize to the top of the list? What was it you said, we don't have a choice, we have to spend money on this?
I think it was really iterating on product, because we were so early. We were trying to figure out sort of what was going to be the early market segments where we could get our early customers and revenue, right? So we needed to be able to quickly iterate on product and development, and then be able to essentially get the early customers. So we really prioritized being able to quickly iterate on product. We used to do, at that point in time, weekly releases where we would release different products that test every segment in the market to try to figure out where could we find kind of a sweet spot where people were still, where there was a big enough problem or painful enough problem that people were still going to be willing to spend money to solve it.
Got it. I remember back then you had this kind of funky website as well to do lead
Yeah,
generation for free, right? Where
yeah,
people
that's
could
right.
go and it was something like, what's the value of my website? What was that thing
That's
called?
right. Yeah, yeah. So there was this website that we had where people could put in their website and they could get kind of a review on how well their website was performing and how valuable that website would be. So,
So
and a
that
lot
was
of that was
effectively free lead
free lead
generation for
gen.
you.
That's right.
Yeah,
Free lead
yeah,
gen.
pretty
Exactly.
smart, pretty smart.
Yeah.
So, how long, when that all started, and I think the funding was in August of
Yep.
2008, if I remember, I remember pretty
Yes.
well.
Yeah.
um, how long did you think that downturn was going to last?
I think it was like it was unclear. I mean, it seemed like it would be a couple of years at least, right? Because it was so. I mean, I remember. I mean, I don't know if you remember this, but right after, because we raised in '08, August '08, and then I think it crashed in about October, November.
Yeah.
And I remember we had this one board meeting where it was like move our money from the bank deposit into treasuries, like treasury funds, because the question was there were these ARSs that were essentially like money market funds that were breaking the buck. So where you put a dollar in and the financial system was so unstable that it was a question of if you put a dollar in, would you even get a dollar out at the bank, right? And so we moved all of our money into short-term treasuries. It was a short-term treasury fund, right? Which essentially is the most risk-free thing that you can do. But that's how concerned everybody was, and we weren't the only ones doing that. I mean, it was literally like everybody was so concerned around just cash that's what we did.
Well, yeah, and a bank deposit wasn't going to cover, FDIC wasn't going to cover 1.5 million
That's right.
in the bank. That's right.
That's right.
Yeah,
That's right.
that's, I remember that pretty well. Um, so it lasted a little bit longer, perhaps even than you
Mm-hmm.
anticipated. It seems
Yeah.
like it sort of dragged into 2010 and late
Yep.
2010 before things started popping back in the right direction. When you look at it back at it now, what were the signals that you saw that made you pretty confident that it was time to start hiring again and spending a little bit more?
I think the big thing was being able to scale sales, right? It was kind of following where their deals were. And I think the big change that really happened was the early pitches. A lot of our early pitches were focused on saving money, right? So people were in our industry, people were spending a lot of money on paid media, and they needed to still get sort of visitors and prospects and leads and all that, but they wanted to find a way to do it more efficiently, right? So a lot of the early stuff was around just how do I save money, and then all of a sudden it changed over to just how do I grow, right? And that change in the market was very clear that there's a change in the macro, that like people were no longer focused on kind of a defensive posture of how do I just kind of do more with less, and was just focused on how do I grow, right? So I think those are
Yeah.
two very different signals in the market from your customers,
Yeah.
from our customers at least.
So interestingly, Jim, today you guys are the market leader in search engine optimization and SEO. Back then, did people know what SEO was?
No, yeah, most companies did not, right? So most companies at that time were either using an agency to kind of do all their SEO for them, or they just didn't do SEO at all. Other than a few of the kind of web native, right? Companies born on the web that were our early customers, like social networks and things like that, that really understood digital. Like those folks got it, but most of the other companies and most of the other industries still didn't know what it was.
Yeah, interesting. So if you step back and away from all of that, we know that the reasons behind each of these two crises is
Mm-hmm.
entirely different.
Yep.
What's different about how you would think about what to do in this time versus last time? How would you think about it differently?
I think the big difference this time is like I think at least in terms of the immediate things I'm seeing, which is still super early, is even if you well, I think two things. One, there's certain industries that are really dramatically impacted, right? That it's probably not going to make a lot of sense to target those industries, right? I'm think like it's obvious like travel has basically
Mhm.
like shut down, right? It's
Yeah.
almost completely shut down. So there's certain industries as a B2B company, it doesn't make a ton of sense to target any resources to try to go after that market. So I think this time it's going to be even more kind of industry driven, right? So there's still going to be some industries that are where they'll come back. I think once they settle down, they'll come back. But I think the other thing is it's not as clear if this will be a short term, like kind of a short thing, and then there's a recovery, or if it's another one that takes a lot longer, right? So I think it's, last time I think it was pretty clear it was going to take a while, right?
Yeah.
And the time before that, in 2001, it was much more tech focused for a long time.
Right.
It was a much more
very sector specific.
Very sector specific. This is across every part of the economy. There's an immediate impact, and there's certain industries that are just decimated, right? Like, so I think, so I think it's a little different in that way.
Right, right. So when you think about the aspects of the situation that are going to lead to a recovery, what do you think are the best signals as a CEO to be looking at? Where do you go to look? Is it economic data? Is it inbound inquiries? Is it people at your website? What are the things you're going to be looking at to say, okay, our original plan was to hire in certain areas. We're going to start doing that again.
I think the first thing is pipeline, right? It's sales pipeline. Looking at sort of the first thing that's happening clearly right now is a lot of things are frozen. So budgets are getting frozen, headcount's getting frozen. And so the first signal that there's a recovery is that stuff starts to unfreeze. People start to kind of, some of the things I'm seeing in the pipelines, people are saying, hey, let's connect again in a month. Let's connect again in a couple of weeks, right? As those things start to happen, you want to see, like, is there still momentum there? Is there, and when you aggregate it across a big pipeline, then you can start to see, is this going to hit my business, 20%, 40%, 50%? And then when does it recover? And you'll see it in the pipeline. And then I think it's adjust targeting. So I think that's the first thing I look at is customers, prospects, what's happening. I think the other thing I think we're trying to do is definitely try to take care of your customers. The first thing that clearly is very clear in what we're currently seeing is that customers, while still hard to get a hold of, they're still going to engage with you because they're already paying for your service, right? And so you want to really, I think, continue to really support those customers and try to keep as much of that revenue as you can. And then certainly from a prospect perspective, it's seeing sort of what portion, what industries in the pipeline start to move. And then I think a lot of what I'm thinking a lot about is retooling the pitch, right? We've been kind of starting to think about, even in the industries that where this makes sense, where your value proposition makes sense, like, why now? Like,
yeah,
why would they buy now? Like, what is a compelling reason for them to act now? Because everybody seems to quickly now be in this mindset of let me wait and see what happens. But so there's this piece of, like, even if all of the value makes sense, like, why now? What's the urgency?
That's a really great point. That's a really great point. So we have companies in our portfolio that, for example, can help large industrial companies augment and modify their supply chain, which right now there's a great deal of supply chain disruption, right?
Yep.
There's a great fit there. We have a company that is doing secure collaboration. And Zoom is a fantastic product, but it's not secure collaboration. And there are lots of companies that need that, right?
Yeah.
So they have kind of a natural fit right now.
That's right. Yeah.
Do you have anything like that you see for BrightEdge?
We're trying to figure it out, right? I mean, I think it's so early. We're trying to figure that out. A big part of what we're saying, we're testing this, right? But and I think the big thing is everything is moving online, right? So you have to digitally enable, because now everybody's working at home, everybody's virtual. They're still, I mean, one of the key things they're still doing is they're still searching, they're still using the web, they're using it more than they were before.
Much more.
And so if this was important to your business before, this is even more important now. And I think everybody's going to be competing for those same set of users in each of those sort of markets. And so a lot of what we're trying to think about is that piece is kind of retooling it to, hey, this is something that drives and accelerates the digital sort of transformation of the economy, and you have to respond, right? So yeah, so I was just looking at this, some of these universities that have been kind of trying to respond to this by changing their curriculum to online.
Right.
But another key part is summer campus visits aren't going to happen anymore. So but they still need to attract those students. Those students are going to be looking online, and so they have to make sure they're discoverable and they're easily sort of have an optimized experience. So, but we'll see what happens. It's hard. It's hard to say.
Yeah, it sure is. So maybe at sort of a 30,000 foot level, do you think it's better or worse or the same as everyone else to be a SaaS company going through this kind of a downturn in the economy? Because there are lots of different kinds of companies out there, and in some ways it feels to me like growth could have an impact for sure, but those annual agreements, sometimes multi-year agreements, can actually be helpful to stabilize things. What do you think?
Yeah, I think it's definitely good to be a SaaS company, right? Because you have the subscription revenue. But I think the key thing is you have to keep an eye on sort of what happens if your retention rate drops by 30%, right? You can count on that revenue for that duration of your average of your contracts, but I think you have to model out, like, or kind of scenario plan, like what happens if that goes a lot lower, right? But it's definitely better than, in the old perpetual license business, you have the maintenance revenue stream, but every quarter you have to go get those deals. And so I'd much rather be a SaaS company where a lot of your deals are not done outside, because also right now, outside sales, I mean, it's not like, you can't, customers aren't meeting, right? In person, like they're doing it virtually. So, it's I think SaaS business, a lot of SaaS business have that inside sales model where it's still a little easier to run in this environment.
Right. So speaking of the model and having inside sales and all the rest, how do you think about the importance of your leadership team and how you're working with them remotely? Any best practices that you'd share around that?
So we are really, really early on that. But we're definitely, what we're doing is just in terms of the response to this thing, we've broken it into a couple different sub teams or sort of cross-functional teams to focus on different kind of what we call our 4 key areas of our business, right? We got cash and sort of just making sure all the, sort of AR is running well, billing is running well, all these things that you got to transition those processes that generate cash. So that transition is sort of critical, and there's a team focused on that. There's a team focused on our core sort of new logo sales team, which is a lot of inside sales, right? And we have over 150 people in that organization. So in each region, turning that into these virtual huddles where they get together on Zoom 3 times a day, where they can see everybody, and we're trying to replicate that floor environment where they're still able to kind of feel a little bit of that energy, because that's really important in sales, where it's like, they kick off the day together with their daily huddle, then they get together in the afternoon, they kind of share what worked, what didn't, what successes they had. That I think, sort of we're seeing that and liking some of the early things with that. And the other thing we're doing is we're doing regular executive huddles, right? So, so 2 times a day we get together, and do the same kind of thing where we go on get together on a Zoom. And the business before was mostly run on a weekly cadence. So basically we have a cadence where we have Monday morning management meetings, then we have a forecast day on Wednesdays where we forecast everything across the business, and we have a people day on Friday where we look across all the people across the organization. We have a market day focused on sort of market dynamics on Tuesdays, and on Thursdays we kind of focus on product and evolution of that. So that was the original rhythm, right, that the business was running on when it's all in person. But now we've had to really kind of break apart some of that and add these daily rhythms where we can still stay very much in sync, because you can't as easily kind of get everybody together in a room and drive something. So I think kind of moving that into that rhythm has been good.
And then every once in a while, you share a bright edge moment with a board
That's
member.
right. That's right. That's right.
I held this up earlier and I was like, wait a minute, it looks backwards on the screen.
That's awesome.
Yeah, I thought so too.
Yeah.
Thanks for that.
Thank you.
Anyway, so, the one thing I would ask is, how do you think about climbing back out of this? At what point, what are the signals? What advice would you give to other founders about, the timing of that? You don't want to be too early, you don't want to be too late. How do you think about that?
Well, I think actually, because we started, fairly close to the first downturn, it's actually a really big advantage to be a smaller company during a downturn, because you can make changes really quickly and you can adapt to the market really quickly. And so I think the big thing there is, sort of find, if you find a sweet spot, right, where the value proposition is really good in the current climate, and you see that it hits, then you can scale that, right? Because it's mostly, I think, and it's kind of sort of market opportunity and pipeline driven, because you'll see it in the pipeline when you're getting good dynamics, and then you basically incrementally invest into that as it's able to produce revenue, and then the ROI on that is really good, right? And so I think you want to, I think, add a lot of ROI discipline to how you're running each of the investments, every dollar that you're spending. The other thing that I think we did when we switched over to being cash flow positive that was really good is I still, even today, I run a daily with the team, I run a daily cash spreadsheet. So I know every dollar that's going into the business, every dollar that's going out, how it moves every day, right? And I know which days a lot of money comes in, I know which days a lot of money comes out, and that gives you a good pulse on the business, in terms of just how things are flowing from a cash flow perspective. Because there's obviously, you have your monthly financial reports, but keeping a close pulse on cash, I think, is really important, especially in times like this. So.
Yeah, I mean, huge kudos to you. I know it's relatively public, but you're running a company that's now has tens of millions of dollars in cash in the bank, no debt, hasn't raised capital in more than 5 years, and growing nicely. So really, kudos to you and the team. It's an incredible machine that you've built and that you're running.
Thanks.
Anything else that you want to add that you think people ought to be thinking about I haven't asked about?
No, I think those are the big things. I mean, I think the only other thing is just, keep testing and adapting your pitch, right? I mean, I think that's the, when the economy changes, the way you take the core value proposition and pivot that, I think is important. It's still leverage what you have, but like find the angle that really lands.
Yeah,
so.
awesome. Jim, thank you. Thanks a million or two.
Thanks.